Man, oh man, today's a good day. Gold and silver prices are moving up, and we are seeing more and more people hop into the Wall Street silver space. They have 58 members, 58,000 members in there now. And take a look at this stack here. It is crazy. This guy says, protect your wealth with silver and gold assets. Don't leave it to chance. Now, funny enough, that sentiment will belie the purpose of this video, because we're going to talk about probabilities. We're going to talk about volatility within metals versus competitors such as crypto, particularly Bitcoin. Now, I don't have any issues with crypto or Bitcoin. You guys know that I don't have any right now. Not to say that I may not have one in the future, some Bitcoin in the future, but I will show you why I think there are similarities, but why I also think there are huge differences that people don't talk about. And I actually did some probability, some statistical analysis to show you why in this video. But first, let's take a look at the prices. Silver is up above $26 now, made a huge move, up 2.51%. That is important. That will be a part of what we're talking about today. Gold is up 2.39%. That is important, and it belies what we'll be talking about today. Now, let's take a look at some articles here, which will also lay the foundation for our talk today. But Bitcoin is dragging down gold's fair value by $158 an ounce. This comes from Cross Border Capital. Now, people have been saying that, hey, why get into gold when Bitcoin's there? It's the better alternative. It performs better, so on and so forth. I will tell you why I think gold has a purpose that Bitcoin, just probability-wise, cannot even match. So I'll get into that shortly, but let's get started on this article. After months of consolidation, the gold market is finally finding some traction as prices push to nearly a 2-month high. Some analysts have noted their frustration with the yellow metal, as it has seen a dismal performance since the start of the year, even as inflation pressures have steadily risen. Many analysts have noted that one significant reason for gold's lackluster performance this year is the precious metals' growing competition with digital currencies, particularly Bitcoin, which continues to trade near record highs. UK-based research firm Cross Border Capital remains extremely bullish on gold as central banks continue to flood global financial markets with liquidity. However, they noted that Bitcoin's growing acceptance has reduced the precious metal's long-term fair value. And here's a quote from them. We calculate that the existence of Bitcoin has probably reduced the fair value of gold by $158 an ounce, given that liquidity is now spread a tad more thinly over these two combined stores of value. Now, I'm going to stop right there. I will show you why I personally would not call Bitcoin a store of value versus gold. And I'll show you that with statistics. Looking ahead, we can conjecture that the revised fair value gold price based on liquidity is correspondingly $2,527 an ounce. So let's get into some of the similarities between gold and silver. So what I did when it comes to my, statistical analysis here, we're going to start over here with the correlation. I took a look at the price returns pretty much weekly on Bitcoin and gold. And there is a correlation in asset returns of 0.6366 and going on, so on and so forth. That's pretty high. So there is somewhat of a relationship here, a positive relationship between Bitcoin and gold's price movements. But as far as how they get there, the volatility, the opportunity in which they actually get those price returns, that differs greatly. So let's take a look at Bitcoin really quick. So I used daily price data to essentially gather this information. And what I did was I took a look at the frequency of the percentage returns And I made a distribution curve here. And what you see here is that Bitcoin has large amounts of tail risk that you actually won't find in metals such as gold. And I'll tell you why in a second. But generally, if you do hold Bitcoin, you will have more positive days holding it daily than negative days. But take a look at these tails. These are fat tails. And if you take a look over here, they are subject to, or Bitcoin is subject to kurtosis risk. And for those of you who may not be familiar with what that means, in investment, it's a very important thing when it comes to whatever asset that you want to get into. Here is a highlight. For investors, high kurtosis of the return distribution implies the investor will experience occasional extreme returns, either positive or negative, more extreme than the usual plus or minus 3 standard deviations from the mean that is predicted by the normal distribution of returns. This phenomenon is known as kurtosis risk. So Bitcoin obviously has large amounts of kurtosis risk on the positive side and even on the negative side. So for me, when it comes to a store of value, that's something that would concern me if I want to put my money in something that's known as a safe haven, for example, and I just want to leave it there. And I wanted to, and I hope that one day it'll become a currency that can be exchanged. I personally would not like to put my money into something that has such violent moves or has the opportunity to have such violent moves as a safe haven. I would like to get into this to make some wild money, of course, but that to me is one of the reasons why I would not compare Bitcoin to metals such as gold or silver. Now let's take a look at gold, because gold is very different. You will actually see that the kurtosis for gold is actually negative. So let's take a look at what that looks like on the graph. That means there's hardly any tail risk, any kurtosis risk at all when it comes to gold prices. And most of the movements are right in the average, right next to the mean of just general gold price movements. So what does that tell you? Well, let's take a look at the percentage moves that we have today. So for gold, we have a 2.36% move so far today. 2.36% would put us right around here. So compared to the average, this is extremely rare in and of itself. So right now we're experiencing some really wild moves. And sometimes whenever I say things like, hey, gold is soaring or silver soaring, and then maybe somebody in the comments will say, well, hey, it only moved up like, $40, or it only moved up like, a few dollars, and, it's $1,777. $40 out of that isn't that much. But when you take a look at this distribution, that is a pretty significant day. And if you take a look at this graph, it looks a lot like how currency pairs look in Forex, because, it makes sense. When you have a currency, you don't expect that currency to have fat tails and massive amounts of kurtosis risk. You actually want it to stay in the middle so you can do trade fairly easily. Let's take a look at the euro versus the pound. Take a look at the euro versus the pound. Hardly any kurtosis risk at all. All of the moves are pretty much, right in the center, which makes a lot of sense. So guys, whenever people say to you, hey, why get into gold when you can have Bitcoin? Well, the main reason is safety. There's safety in holding gold. When it comes to Bitcoin, you have much more opportunity to not be safe, but there is much more opportunity to make money or to lose money. So guys, let me know what you think about this in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.